Amit Dixit as well joins us. Hi Amit, it's a setback for Vedanta in the sense that Madras High Court has not let them go ahead and reopen the smelter. But could you clarify, did you have this factored into your numbers for FY21, or were you expecting it in FY22? That's if it's listed, that is.
No, we are not. We had not factored it in our estimates because the matter was, still in court. So we had no clarity on when this one will open actually. So we didn't have factored it in our estimates so far, neither for FY21 nor for FY22.
So let's put it this way: were this case to be in Vedanta's favor, what would it do to your numbers then?
Well, if you see, we in our SOTP, even at the reduced TCRC margins, the contribution of copper is roughly 10 rupees per share. So that is the sort of contribution the copper division has. But the thing is that since we hadn't factored in, if it would have been successful, we would have added $10.
Okay, all right. So now you're not going to be adding that $10, but the stock, is perfectly reacting to the fact that there is no estimate, there is no factoring in of any kind of contribution coming in from the copper smelter. Quick question then, Amit, earlier today we understood that Vedanta, that's the parent, Vedanta Resources, had gone ahead and raised some money via bonds. I think that takes the total amount to around $3 billion or thereabouts. Now they have enough money at the parent level to go ahead and delist the company?
Yeah, so I believe they have enough money. Again, it depends on what reverse book building would throw. But I guess the bond raise has been also done to retire some of the 2021 bonds.
Okay.
So they have raised a surplus liquidity essentially for retiring a bit of 2021 bonds as well.
What was that amount due that they had to pay by 2021? If you have a rough number?
I don't have the number with me because it relates to Vedanta Resources, not limited. But yeah, but that was partially for that. So the thing is that any surplus that would be left out of this raise would be utilized towards the payment of that 21 bonds, essentially.
All right, final question then, Amit. Amidst all of these things which are happening right now, there is that delisting event, there is a strong metals rally, all of that. The retail audience would want to know, what should they do with the stock? What's your call? What's your rating? What's your target price?
No, so we have a hold on the stock as of now, and our target price is 145 rupees a share. So we have a hold rating on the stock. Now looking at it, these are very volatile events essentially. So very hard to recommend anything because the thing is that reverse book building will start and the entire process will take its own course. So it's not proper for me to actually comment on what to do at this point in time.
All right, appreciate you joining in, Amit, and giving us your quick take in terms of Vedanta. So short point there, the Madras High Court has said no, Vedanta can't go ahead and open the Tuticorin smelter. The analysts, they were not estimating anything, but as Amit said, if it did come in their favor, then they would be adding close to around 10 rupees to their target price out there. What's driving the stock right now is the delisting. What's the progress on that front? The promoter has raised close to around $3 billion. That's effectively the amount they would require to delist the company at current, at current prices. So whether or not the promoter goes ahead and accepts what the public wants in terms of the delisting price, that's something that time will tell. We'll have that book building, that will take place. So, that's something that you should be tracking. Well, we'll slip into a short break on that. When you come back, we'll get you more on the markets as well as on stock specific action.